faster with Apple Pay, a safe, contactless, easy way to pay.
Good evening, everyone. My name is Jeff from Retail Marketing and Investment Bank. Thank you so much for spending your time this evening to attend this webinar. Really appreciate it. We know the time available. We try our best not to waste it. So this time we pack in one, but two country, Malaysia plus Singapore stock market content together in 1 hour to bring the best value out of it. Although it only take 1 hour to present, but our presenter has put a months of analysis and hard work in the hope that whatever info that going to present tonight will work more than what you expect. So first, we introduce Chee Hao from our head of equity research team. We'll speak on the topic about Malaysia markets insight and stock pick, followed by Christopher from EquitiesTracker to talk about how to search growth stock in Singapore stock market. And the Q&A session will be at the end of the session. So without further ado, let's all welcome our first presenter, Mr. Lew Chee Hao, to start the presentation. Chee Hao, mic is yours.
Okay, thanks, Jeff. Good evening, guys. Hi, Chris. For today, I will start first. We'll talk about the equity market. So basically, just to update what's the market outlook for the current market situation. As usual, we have to go through the disclaimer. Okay, we usually start from the macro view. What our economists think about Malaysia. As for now, I think Malaysia, we still expect in 2023 GDP growth is still expect to have a growth 4.5%, even though last year 2022 we are 8.5 to 9% 2022, but 4.5% GDP growth actually compared to a country like US and Euro, actually they are in the middle of a recessionary, when we are still on up for 4.5%. So technically, we are still doing okay. Mainly is due to the resilient domestic demand that partly mitigate the impact for the external headwinds. I believe you guys, if you read from the news, there's a lot of headwinds like small bank in US, there's some trouble. There's a trouble on the Credit Suisse as well. For Malaysia side, OPR rate, which is the overnight policy rate, is going to be, our view is going to be a 3% this year. Although right now, the last two meeting, Bank Negara didn't raise it, it still remain at 2.75. This is our view. For economy, one of the upside that boost our GDP growth to have a 4.5% mainly on this based on these few reasons. First, we see tourism. Last year, even though China haven't reopening, this year China is just reopened. Last year, we are coming up from MCO. So we see the inbound tourists actually continue to boost our local tourism. We see the interstate travel, you call it like Penang, Ipoh, Malacca, all these places, Asia tourism is booming. This is another plus point. And we start to see labor market, actually the condition is getting better. The year before, especially after COVID, we have an issue on labor, foreign labor as well, talent labors also. But right now we see the labor condition continue to improve. E&E sector, electronic and electrical sector is always our strong sector in Malaysia, especially boosted by the EV, solar related products that actually are further enhanced. So you see the chart in the down here, actually by export itself, E&E is always one of the highest, 38.1%. Then secondly followed by oil and gas product, then followed by palm oil. And investment you start to seeing after we have a new government last year, new utility government, then we start to see FDI, foreign direct investment, and DDI, domestic direct investment coming to is happening, is coming in.
Sorry, Chee Hao, I think you're muted. Because I can't hear you. Sorry.
Okay, can you hear me?
Yeah, can.
Okay,
Yeah, just this slide.
just this slide.
Yeah.
Okay,
Once you turn this slide, then you are muted. Right.
okay. So the previously can hear.
Yes, can.
Okay. Thanks, Chris. So for the ringgit side, basically, we are viewing our economists, I think is 4.2 to 4.3 target on this year, December. So based on what reason? Based on the fundamental of the ringgit actually pretty still strong, we think. Firstly, economic growth, we still project we have 4.5% growth this year, and inflation actually we're doing quite good compared to other countries, especially Euro and US, UK, mainly because of our subsidy from government is strong. So the core inflation actually around 3% as for now. International reserve also doing pretty well now. It is still in a healthy reserve at USD 114 billion by end of 2022. Oil price, as you see and here, oil price still remain around $80 per barrel, $90 per barrel. So no much changes. With the high price of the oil price, actually good for us because, like I said just now, the previous slide that one of our export product is oil and gas, then followed by palm oil. Then continue see tourism recovery that steam our GDP growth. So all this will boost our ringgit to 4.2 to 4.3 by December this year, at least for now, the target. And GDP growth is 4.5%. This is how we view on the economy in Malaysia right now. As for equity, our target is viewing by year end FPN KLCI target is 1630 back to a 0.5 standard deviation below its 5-year mean. 16.5 times. Reason behind almost same. Also, we have a stronger currency outlook. It's like previously we have up to weakening to 4.7. Right now we are stabilizing. Okay, 4.4, targeting 4.2. Previously the weakening trend of the ringgit mainly is due to US dollar. When US dollar is so strong, then why was this become weakened? But right now we are start stabilizing because potentially US is going to the end of an increased interest rate path, and Malaysia have an attractive equity valuation. In-house projection also 4.5. So one of the main theme on this year, what we call the theme, what we call the catalyst, actually we are looking at the China zero COVID policy. So basically, if you read from the news, this year China is reopening after I think 3 years. So basically, when China reopening, basically positively impact most of the sector. Some of the reason is almost same. For example, their consumption is going higher. You use more crude oil. You eat more plantation crude palm oil. All this, and we see the improvement when the tourism increase. You see the HoReCa, hotel, cafe activities increase, supporting the CPO prices. And in terms of banking sector, actually we're looking at Hong Leong Bank because Hong Leong Bank have a bank called Bank of Chengdu in China, which is doing pretty well. So a relaxation basically is good for them. On construction also, construction technology and some of the ports also. One of the reason is for past few years we have the supply chain problem, labor problem. Right now the supply chain problem because of reopening, the supply chain try to back to normal. So this will ease the supply chain problem. Hopefully it bring down the inflation. So most of the sector like consumer, we also like Pajaya Food, Padini, all this is because of Chinese tourists is coming in. Greece is doing pretty well. If you see any of the big shopping malls actually are full of people. And transport also including like Westport, they are doing more. Malaysia Airlines, they are doing more passenger. So all this is a main play for market outlook for 2023 because of China reopening. Okay, moving on, some of the sector view I'd like to share with you is see how's the market is doing right now, especially for equity market. You see KLCI actually is not much interest. For the sector view, I use a price chart to show you that, because indirectly that they will show you that how's our market doing. So basically, recently it break up from this downtrend line, indicating there's a positive momentum, but overall we are still in the sideways. This is FPN KLCI, represent the top 30 blue chips. So near term supports are 1390, 1372 is a sideway to upside 1460,500. Then move to a small cap. Actually, small cap on last year November they start to recovery, and only on January this year they have some pullback around 1 month plus. Then eventually it break out and stabilize between 15,000. So compared to big cap and small cap, actually we are favor more on small to mid cap stock, at least for now. Those they are doing good. Okay, then we run through sector by sector. Okay, so finance sector represent all our banking stock in Malaysia. So a month ago or March, there's a breakdown because of the trouble from the US side, the Silicon Bank, the small bank, they're having trouble, and the Credit Suisse, this influence the sentiment. Based on our channel check, actually our local banks shouldn't be worried, because our system actually compared to US is quite different. And for US side, the Silicon Bank actually they are more on the tech deposit, which means they receive all the startup company, technology company deposit. But for us, actually our local banks is quite diversified. Okay, and we have a bank guy at the back to protect all it. So overall, it going to be a sideway. Okay, moving on, we see energy sector. If you take a quick look at this, energy actually is recovering strongly, even though there's a pullback, but it's still trading a major uptrend line. So oil and gas basically is a sector they are rising because of as with the obvious reason that $80 per barrel, $90 per barrel actually is still pretty good profits compared to they are only $60 or $50 per barrel. For consumer product, basically our consumer, even though we have tourism coming back, but in the same time they also have an inflation problem. So cost of doing your consumer product also went up. In fact, because of inflation, there's a lot of things actually went up. So it's quite challenging. It's a sideways trend for now. Property has been downtrending multiple years. Even now, fundamental view we see is positive. We overweight it. Reason behind we start to seeing some of the developer there's coming value. But technical wise, actually I think it still need more time for property to coming back. Reason behind the supply over more than demand, the problem is still there. As for construction, okay, it's not much changes in the sideway. Reason behind is also inflation. Building material costs is all went up. Plantation is sideways. You will see from the left hand side, actually it's happened on last year March when Russia invaded Ukraine. You create a supply demand change on palm oil because of sunflower oil, all of this. But after that, he went back down and have a sideway. Some of the reason is labor shortage continue to be an issue. Another one is fertilizer cost is so high for planters to replanting. So this they are having a problem. As for technology, having a correction for the most last year, right now is still in the sideways. So not really catalyst attractive. Of course, this is just a broad case, so we need to be more selective. Healthcare, even have been downtrend, oversupply problem until recently there's some breakup. But our fundamental view, we still think that we still underweight it because we still think the oversupply issue is still there. But one of the reason they are spiked out for the healthcare because of the ASP is increasing, which means the average selling price for the glove actually increasing, the increased price. But in the same time, our channel check from our glove analyst review that the plant utilization rate actually is quite low. So on and off, this is what we think. Okay, so technically, after you look for the KLCI small cap, basically we will prefer more to a small to mid cap stock. And most of the sector, to be honest, is not booming right now. So technically, from my technical view, is there's no really have a strong sector, not like the year before we have a strong sector. Here we have a technology sector, we have a glove sector, or more few years ago we have an oil and gas sector. All this, so the catalyst is not there. Even though the generally the catalyst is that China reopening will slow down, hopefully will slow down the inflation. So this year play, we are focused on when you come to a stop it, you need to be very selective. Okay, so not from the sector, but from the individual stock, they are doing pretty good from by themselves. Okay, some of the stock we are looking at is first is Gamuna. So Gamuna is more on the mid to large cap stock. For me, I think it's a large cap stock. They are the market leader of infrastructure. So they do all the like MRT3, MRT2, all this. Their technology is good on doing all the huge infrastructure. What happened is another segment for Gamuna basically is a property player. What happened for Gamuna is recently they have acquisition for this donor Australia transport project. Because basically they are going into Australia and going in big. Okay, so they used to already have stabilizing in Australia with DB infrastructure and Gamuna engineering Australia, but now they're even going bigger because they take over a company. And so we predict a higher order book underpinned by the acquisition of Australia asset. So the additional we are expect is around 2 billion AUD, which is around 6 billion ringgit over the average on 3 years. With these DT infrastructure, actually Gamuna also in the same time, instead of just betting like subway, Sydney subway, they actually also can tap into the small to mid-size project. They are lower than AUD for 800 million. And Gamuna Engineering also may jointly bid for this Sydney Metro West or this Rain Hope East project. Basically, they are doing all the big infrastructure. And domestically, we still think there are potential jobs. There are CMC 303 and MRT of the MRT3 and also Penang South Island. So technically, they are very strong growth in our construction engineering segment and are going really big in the Australian market. Then we see this opportunity for it, and our order book is expecting to expansion. Chart wise, basically after a breakup from 4 ringgit, actually is about 1 to 2 years high at least, or multi-years high, and stabilizing above 4 ringgit. So in the longer term, actually is worth to look at it for the Gamuna, especially they are inventing into Australia market. Previously, they already win some of the project from the Sydney. Okay, moving on, we have Panda Master Corporation. Okay, Panda Master basically is a technology counter under our coverage. So what they do is they are expert in this automated test equipment. So like your smartphone, right? All your chips, you won't go off, you won't go trouble because everything will go by this test, and they manufacture this automated test equipment. Now mainly is this one, but right now they are expanding on this FAS as well, called Factory Automated Solution. Okay. Come back to ATE first, automated test equipment. Actually, we still see the robust because of from the no longer from a handphone to be a smartphone, to be honest, but it's from the automobiles industry. So the global vehicle is electrification trend, we call it. So this basically will be the bright spot for Panda, for which trucks they all as well. So when there are more cars need to be electrified, then basically they will create the opportunity for them to build more ATE automated test equipment machine to them. Okay, order already exceeds 500 million. So previously mostly is ATE automated test equipment, but we start to seeing the FAS factory automated solutions because of industrial 4.0. Their order book actually 40%, nearly 40% actually from FAS, and 60% from the remaining for mostly for ATE. So we see that this is growing fast. And even though thirdly is electro or typical demand is expected to pick up. Okay, smartphone is slow down, but time to time they need to improve version of the sensor. All this, they're still driving the need for the equipment. And for Panda, there are a very small segment is in a medical device. Not right now, they have start to seeing some revenue breakout on medical device segment. So in the longer run, actually, portfolio diversification efforts across the market segment. So you got automobile, you got medical, you got smart factory, smart manufacturing, all these. So and they are also expansion their customer base, and they have a subsidy listed company in Hong Kong. So with China reopening, basically benefit to them as well. And continue to see factory automation solution to grow, supported by the adoption of Industry 4.0. So chart-wise actually is a breakout from here, then quite slowly to moving out. It's in the early recovery stage. So we expect there are more upside in the near term. Thirdly, we going in is Infomina. So basically, Infomina is a technology solution provider, IT company in Malaysia. They listed not long ago. Mainly they are designing and implementing turnkey application. Okay, they have two main segments. One is they call it the turnkey. Turnkey basically they help you to design everything, the infrastructure of the IT solution to behind there, and they use mainframe technology, and mainframe technology is come from Broadcom. Okay, so then they will customize for you. Then slowly the second segment is called renewable. Basically all your customized operation, maintenance, support service from renewable solutions. So he's a proxy to a rising demand for mainframe technology in Asia Pacific. They are sectors as a sole tier 1 value added distributor, VAD, we call it value added distributor for Broadcom mainframe software. Allow Infomina to tap into a Broadcom global outsourcing strategy. They are focused more on the Southeast countries. They are large funnel from a recurring sales for maintenance support service for existing. So after they got a project from, let's say, to do this mainframe infrastructure, okay, they call it turnkey design everything. Then after that, they still can offer like renewable upgrading service of this. So this will become a second segment. So strong order book to anchor growth. So by now is approximately around 500 million order book, and this will continue. They will continue to bid. In fact, the latest quarter result they haven't shown in the recent win there from the Philippines and Malaysia. Sorry, from the Singapore Maybank, all this contract. And potentially we still see another is a third pillar of the main business segment. Just I mentioned, just there are two main one, turnkey and the renewal. Now they have a third pillar of main business. Recently has been appointed by CCM, Companies Commission of Malaysia, for 6 years as a service provider for an online platform. So they want to do this as a third pillar to a service provider for online platform. Then they'll slowly come out how's the charges. So the prospect is the capability. Let's say you can carry on Broadcom mainframe software, basically can offer customer solution and continue to establish a partnership with an international technology company in the mid changes. And if the demand of the mainframe technology continue to grow, so they are riding on this. Our analyst is forecast a strong FY22 and 25 earning CAGR of 41%. Reason behind is higher sales on both turnkey and regular segment in the coming quarters. Regional expansion into, okay, if you see the chart here, actually their meaning is still Malaysia, Thailand, Philippines, but slowly they will continue to expand to let's say Taiwan, China. They are looking on it. So and also the improving operating leverage. Chart-wise, actually ever since they listed, actually that boost out quite strongly. And in fact, right now, the last 4 session is just a pullback after they have a quarterly result. So anything back to below 140 will be a better entry. Right now, it's just a pullback and build base. Potentially, if it can stabilize and go higher, then it's worth to look at again. Okay, moving on, we have a stock on the move. Basically, is a trading idea from myself actually. From our retail research site. Basically, stock on the move is a product for us. It's a weekly product, but based on technical as well. We have stock on radar as a daily product, but stock on the move is the weekly products. So some of the ideas I'm still looking at is like PIE Industry. PIE Industrial actually is an electronic manufacturing services player. We call it the EMS player. They used to focus more on consumer product. If you know, right now the market is they don't really give a lot of good prospect on the EMS they are doing for consumer product, such as company that do for the vacuum cleaner, consumer product, all this. But market actually is giving higher value on valuation on the EMS player they are doing for industry. Okay, such attack, Asian Gate, even today we have the CAP EMS. All this is considered as a industrial EMS, which means they do EMS service for industrial products such as telecommunication products, types of 5G products, wireless products. So potentially PIE is shifting there as well, partially. They still mix consumer and industrial, but they've been doing is a one-stop like integrated EMS provider. So prospect is looking is the company is aiming to win more new customer orders via his fully built up vertical integrated manufacturing facility. Then they further upgrade and expand to existing plant to engage more new business. They also have the raw wire and cable that actually is a potential make them to tap into the EV in Thailand as a supplier of EV parts. And financial performance, basically the latest quarter is doing not bad. Year-on-year up, revenue year-on-year up 19%, and net profit also up 28% year-on-year due to higher demand from the EMS. In FY22 whole year, actually revenue up 14%, but it's a record high revenue, 1.16 billion. VAT also up 17% year-on-year. So chart-wise, actually is on last year, actually he went down in a correction, mainly because from a company annual report is mentioned they have a labor shortage issue, but right now seems like the issue is easing, so the share price will start to continue. So here is almost is the all-time high. If there's a continue to go higher from here, then we expect more upside. Okay, disclaimer. Okay, I think that's all for me. Thank you. I'll pass back to Jeff. Thanks.
Thanks, Chee Hao. Please stay for a Q&A session later here. Now our partner for EquitiesTracker will speak about the Singapore potential growth and defensive component analysis. Welcome, Chris. The mic is yours.
Thanks, Jeff and Chee Hao. All right, let me try to share my screen. I see. All right. Can you guys see my screen now?
Yes, can.
Can see my face?
Can.
Can. All right. Just kidding. Thanks for tuning tonight. Right. I know there's upcoming holidays, and but we will try to keep this session short and sweet, about 30 minutes, and then we follow by a Q&A session. All right. Okay. First of all, as a standard practice of our EquitiesTracker, we will have a disclaimer. And tonight, what I share here is actually totally no stock tips, and it's also not a buy or sell recommendation. Okay. I think Chee Hao just now has done a very good job in sharing all this technical analysis and fundamental analysis on Malaysian market, right? And what are the trading ideas? And my part tonight actually will share more on the Singapore stock market. But if you are looking at trading ideas, right? you can do check out our website here, s3.equitiestracker.com, because we had actually used our system, and because we collect a lot of data, we are data collectors in Malaysia's market and even Singapore market. Thus, we actually filtered out what are the stock that actually suitable for trader to trade with, the stock that good to trade. For example, you have the stock that actually have sufficient liquidity, and which means you have very high volume, and also there's volatility in share price, which these all are actually in our system already. This is other function that we have rock bottoms, uptrend or support opportunities, downtrend oversold opportunities, etc., etc. Right? And now it's best we have Chee Hao here to to ask about. But if you're looking for a shortcut to shortlist what kind of stock that actually good for trading, I think this is it. Okay, but my part, I'm not sharing about the technical analysis because that's not my forte also. My focus actually, I'm a research analyst, right? I'm focused more on the fundamental parts. Actually, is where the business perform over the years, and it is business that matters. And when business do well, and so do their shares, right? And when business suffer, and the stock will suffer as well. So our study is just company fundamental and what are the company that have the potential. And please do note that actually sometimes in the short term, stock prices can move around and not do nothing whatsoever to do with the underlying value of the company. But in the long term, we believe, right, the company fundamental have a direct effect on the share price over the long term. So besides trading ideas, we also have these fundamental ideas for you guys as a value investor to look at when you try to exploring Singapore market. Because like we have a lot rising star, dividend king, moat defenders, cash holders, and continuous hero. But tonight's session we just focusing more on the rising star, right? And rising star are continuously grown their net profit over the last 3 to 5 years, and probably implying a certain improvement in their company or industry performance, right? No, maybe I can call it rising star, but I think more people will are more familiar with this term multi-baggers, right? Okay. So I in my presentation slide also would like to talk a little bit about multi-baggers because invest is a terminology invented by Peter Lynch, right? So multi-baggers basically is the when the stock that double up your investment or multiples times higher than your initial capital, right? So what is the baggers? And later on, what you learn is actually what are the actually during ETs, right? We also do we always do research on the stock market and the companies, right? So previously we have done a research, and actually we do found some commonalities of some of these multi-baggers. And later on we'll share what are the commonalities, and also what are the skill and strategy that you need to look for your next multi-baggers. Actually, where do you find them, right? So okay, first of all, what are multi-baggers, right? When you're invested at 100,000, maybe if you are make it and you sell it at 200,000, it's called two bagger, and if you are 100,000 and that become 1 million, it's a 10 baggers. So this is quite simple terminology, and maybe some of these later on the rising stars, right, in our filter, we'll try to share with you. Later on in the last part of the presentation, we try to bring you to our web page. Show what are the companies in Singapore Stock Exchange that actually perform, what that match some of the commonalities. But you all need to do your own homework because I'm not a financial license advisor in Singapore. Although I must emphasize, EquitiesTracker, we are actually is a license, is an asset management company licensed by a Security Commission of Malaysia. But currently we do not have can give recommendation to Singapore stock. All right. So how to actually spot all these multi-baggers, right? Actually in ET class we actually always talk about we categorize of 6 categories of stock, And we actually strongly encourage you to come to our ET investment classes and give you a basis of investment, right? Actually, in terms of beggars, right, that we saw actually sometimes they are already become an investment grade stock, and basically they pay dividends, they consistently making profit and operating cash flow over the last 10 years. But the potential multi-baggers that they are in terms of the financial figures, they are not same as those on top of the screen, right? And we just try to catch before that they become an investment grade stock, right? Maybe they in top categories, they between startup and emerging, right? Maybe if we are lucky enough, right? You can try to find who are the 3 baggers, 5 baggers, 10 baggers over the next 3 to 5 years. I think even 5 baggers over the next 10 years, they will be a very good result for your portfolio already. So, but I have to make also a disclaimer first. But certainly some of the stock, right, the higher return maybe can be riskier than those as an investment grade stock, because it's kind of risk and reward ratio, right? And yeah, and one of the things that actually I'm not saying that actually investment grade stock are actually do not give multi-bagger return. I'm not that's not the message I'm trying to say. But I'm saying that actually there are possibility that investment grade stock can be multi-baggers and become a rising star and then continues growing. But in terms of the rising on the share price, the price performance, right? Maybe the startup emerging, those small and mid cap stock that can give you better return over the long term if you find it correctly. Okay. Also, this slide actually presents you what are the multi-baggers, the numbers of multi-baggers in Singapore Stock Exchange, right? Actually, we do calculated the study actually ranging from seeing the August 2011 to August 2021. Actually, we did a study and we to be data driven. So, what are the chances that or the probability that actually you can get a multi-baggers in your portfolio, right? So some people might saying actually Singapore market might be quite boring lah. So market sometimes that saying that I heard people saying market never move lah, not interested lah. But sometimes not people actually they are just our opinion lah, but they all these are not data driven lah. In terms of like ET, right, we always try to be data driven. So we dig a little further and find out actually what are the probabilities. Actually, you can see the probabilities of having a multi-bagger stock in terms of 3 to 10 baggers actually are 6.5%. Actually, are higher compared to the other exchanges. Okay, so yeah, this is the key message that I try to bring out, right? Okay, in terms of baggers, one of the we try to aim for 10 baggers, but sometimes for your company to perform and become a 10 baggers, all right, potential rising star, you need time to to wait the management to perform or wait the company to deliver the result. And actually not a lot of investors actually can turn out from the market, and because for 10 years not a lot of people can turn out of the market and not look at the ignore the market noise, right? Because every day we are all bombarded with so much of information. We always sometimes we always have itchy finger, right, trying to do something with the portfolio and then to make that portfolio become better. But I honestly do not think that actually will work, because if you found a decent stock, you have to hang on to it long enough to ignore your market noises, and they also have some benefit also. If you can ignore market noises, you do less work, and you are not making the portfolio worse actually. So this is actually the duration to let your stock to become 10 baggers versus the compound annual growth rate of the company have to deliver. All right, let's say your company, a share price actually rise by 20% a year, okay, which means every single year the share price go 20%, all right, go 20%. you need 13 years to let it become 10 megas, right? So for a normal investor, it can be around 15, 20, 25%. I would say this is a pretty good result, right? If compared to Buffett level is 20 over percent. And yeah, you still need a long horizon to let your company to become a 10 megas, because if you have 10 megas in your portfolio, right, and you hold long enough, that portfolio can actually offset the other store who are around not performing, because you have studied those successful investors, know how they invested. They are not making 100% correct, which means when they invest on 10 stock, they are not, they do make mistake, right? But maybe 3 or 4 of their stock actually perform and become a beggars that actually cover all their losses, and that made the portfolio that actually stand up. So one of the key messages of this slide actually, do look at long term, right? Invest long enough to let your company to perform. If you think about it, maybe you say 10 years is very long. 10 years might be seems very long for a person perspective, right? But if you think about it from a company perspective, a company can literally live on forever, like, because the company ownership can keep on passing to the next generation, right? So a company lifespan can be more than 100 and 200 years old. Like Nestle is founded more than 550 years old. So the growing phase of company, maybe last time start up, and the emerging phase can be last for 20 to 30 years or even 100 years. The company can still growing, right? Until they become an investment grade. So yeah, do try to longer your investment horizon and find I must emphasize one thing first, and rule number 1 is only invest in good stock. All right, this only applies to good stock that can hold long term to it, not the those companies that are continuously making losses over the year and then not paying any dividends. I'm not saying that you can hold on to that company, but only apply to good companies. Okay, no, now I'm going to share what are the commonalities that what are all these multi-baggers, right? First of all, the very important thing is actually they have we will call it total addressable market, or TAM, because TAM is actually important metric for business. You can think about it's a you can think about the TAM is the total number of your potential customer or user of your product. Okay, your potential customer can give you a sense of what is the size of the market you are entering. So you definitely want to invest in some company with have growing total addressable market. Okay, so sometimes the company will not show you, right? You have to do your own study, do your own research, and try to find out these figures yourself, right? Asking around, and probably I would say in ET we also identify few industry or trends that actually will help the companies to showing their improvement in their TAM, right? What are the trends? Because last time we call it unstoppable trend, right? Unstoppable trend is something like saying you are sailing with the wind behind you, the trend that you cannot stop. For example, green economy, like renewable energy. So now we can literally help every company management. They are saying that actually we have to invest in ESG compliance. We have to build solar panel on top of our roof, and also we have to be more environmental friendly per se. That's the green economies, and others things like digitalization. Excuse me. So and then we have all these economy modes. There are modes like saying that actually okay, economy modes, you can think it as a company competitive advantage. Okay, so that because success do attract competition, right? When your business are so successful and making a lot of money, people will confirm copy your business model and open up a similar store next to you and try to get take some customer from you, right? So those multi-baggers, they have all these communities that they have certain economy of moat that prevent other people taking their profit over the long term, right? Basically, they can fence off competition. How they do that basically can come from several aspects. For example, they do have some license, like you have your monopoly business, or you are so cost competitive that your competitor cannot copy your model or produce the same thing as cheaper as you in same quality, right? And also number three, maybe growing revenue. Maybe basically number 3, 4, 5 and 3, 4, 5 are quite similar. They are growing in revenue, growing in net profit, and sometimes this growing in net profit, right, they have to be justified by growing in along with their operating cash flow. Okay, so and also some companies that actually do grow their price earning ratio, because some investor, when the company did perform and deliver very good set of results, investors are sometimes willing to pay more for a company. So, and this also driven up the share price, and this one of the things that we see. And also they are expanding profit margin, because in terms of profit margin can be seen in terms of there can be more economy of scales, which driven down their cost and to expand their profit margin. Maybe they have a better cost management, they have a better pricing power. That's one of the things reflect in their financial statement. And typically, all these multi-baggers are also smaller in terms of their market capitalization, which means the market cap is company valuation. You can think about how much is the if you want to acquire a whole company, that's their market cap. So a smaller market cap company can we see actually they tend to be have a higher chance to become a multi-baggers, because they are in, as I said, they are in the emerging and startup phase. So once they grow, they can really grow, right? Compared to a company with a market capitalization of 100 billion, because everybody is already their customer. You cannot assume they can continue to double up their customer base or their product selling price over the next 1 or 2 years, because they actually the investment the higher market capitalization company can be slow and steady, right? They already enter a matured phase life cycle of a company. So yeah, and one thing that actually we telling investor is that actually we still can spot this multi-baggers company 3 years later, because let's say a company actually turning around, or they are in the emerging phase, right? You can still wait 3 years that they continuously growing their revenue, net profit, and operating cash flow. Only then you buy and invest into the company, and after maybe 5 to 10 years, you still can multi-bag and multiply your investment tremendously. So it's not too late sometimes to discover the germs. So what are the skills and strategy you needed to observe? Maybe I already covered some of them. In terms of total addressable market, definitely you need some observation, and you need common sense. To understand the company you invested in. Maybe later tonight you can open up your portfolio and see the list of your company and try to figure out what is their total addressable market of your company that you already invested in, right? And try to figure out whether they can, is the total addressable market continuously growing or not. Whether they have economic modes, all right? Understand the qualitative aspect and the point 3 to 5, 4, 3 to 7 are basically language of business. This is language of business, which means you have to understand some accounting terms. So yeah. Okay, now after explaining all this very long-winded explanation, right? Now let's go into our software and find out what are the companies that have some of the commonalities, right? Which is rising stars. Actually, our topic focus tonight is actually on Singapore Stock Exchange market. That actually companies that can grow in their net profit, because we filter out based on net profit, and increase in growing in their net profit sometimes can also meaning that the company actually have growing in terms of revenue and operating cash flow. So I'm going to jump to our website now. I hope you guys can still see my screen, right? Okay, okay, just click on Explore Stocks. Okay, so you are seeing our website now, which is totally free of charge. All right, because we partnership with mBank and also Singapore Stock Exchange, we try to we usually publish this data with charges. Actually, in Malaysia we do apply a fee for our software, but for Singapore market, right, we open this website totally for free for everyone. So please do check out for this website, and you can click on once you have this our homepage, you have this stock search, right? Click on Explore Stocks, and we have trading ideas and we have investing ideas. So actually can fulfill both your needs if you are a trader and also investors. And just click on the rising stars. Okay, so we have a list of the company that fulfill growing 3 years net profit. All right, and we have actually listed down what is their percentage of growth in the last column. Okay, so in this case, let's see how many companies we have. Right? Actually, we can show about 200 companies in the page, but we actually list down about 145 companies here. So actually, I must emphasize this. I'm not giving a stock list, and I'm not giving you answers. I'm just try to shorten up your time to do research, because if you are asking the same question to your reminder, maybe you ask them, how many companies are them actually having net profit are continuously growing for the past 3 years, or right, or 5 years. Probably no one can answer you because they do not have data. But in ET we have all this data, and we sort it out for you, right? Just to be data driven. Can you imagine if you read all the annual report one by one for in Singapore Stock Exchange we have 600 over companies, and you read every single one of them, and you take you tremendous amount of time. And by the time you finish reading every single one of them, they already published new report. So can you imagine? We save you a lot of time. So actually, we not only have last 3 years, we do have over the last 5 years. So basically, we have 13 companies here over the last 3 years. Because some might argue that actually, over the last 3 years, they are because the latest year's net profit is sometimes because all these data are actually audited result, which means already published in the annual report. So this one is actually financial year end 2022, and previous year is 2021, and the previous 2 years is actually your result in year 2020, which is the year that happened COVID-19 pandemic, right? So it might seem a lot of company definitely making losses or even losses in the year 2020 lah. But it is very normal to see they have a recovery in terms of their net profit. But you can just try to pick over the last 5 years. They can grow their net profit even during the COVID pandemic, right? I would say this is a very, very good set of results already. So you can see there's about 13 companies here. Yeah, but I must emphasize this. You have to put your own judgment into analyzing all this company. So do not blindly and go and buy. Actually, it's not our intention to recommend any stock, but in ET we always teach you how to fish instead of giving you fish, right? Okay, let's see a few companies lah, all right, how to analyze them. So in terms of the time horizon, it's not as important anymore. So we just click on one of the company, GK Gore Holdings Limited. Actually, this is we have a company description here. It is a investment holding company that provide aged care services segment. All right, and then how do you read their financials? Actually, you can go to the financials and click on this. They are showing actually improving in their net profit result, but there's a cash here. Actually, you're seeing in their turnover, right? They are reducing their revenue over the years. It become negative. So actually, do not fit all these communities criteria of a multi-baggers, because they might. I will assume they are selling some of the asset that boosting up some disposal gain or one-off profit. So sometimes you need to put some context out of all these numbers, right? You cannot purely blindly follows all these numbers and figures. Okay, let's look at the other companies. Golden Energy and Resources. I would say this is a company in energy sector. They produce, operate energy coal, and yeah, they have business in energy sectors. So if you look at the share price, I would say, oh, this company, the price performance actually, from less than 20 cents to more than $1. So let's look at their financials. Yeah, you're seeing their revenue actually quite huge, 5.6 billion. 5.6 million, sorry, 5.6 million. And then you can see they are making 700,000. Okay, I would say in terms of absolute amount, actually it's small, but it is US dollar lah. So you have to, if you are in Singapore, you have to multiply by 1.2 or 1.3. If you're Malaysian, you have to multiply by 4.4, 4.3. So it's about 20 million kind of revenue. Okay, that's the thing. So I think you can, I'm not going to explain every single item on the company's website, on the company's details, right? So I'll just show you guys what are the companies here. They are Wing Ties Holding Limited. Actually, this company is in real estate and development operation. So the share price is 153. And actually, the company is operating a joint venture with Fast Retailing Japan. They operate Uniqlo in Singapore and Malaysia. Yeah. So they are seeing that actually they are showing improvement in terms of net profit. All right, that's it. So do check out our website and spend your time to playing it around. It's actually totally free for you. And that's my sharing for tonight. Over to you, Jeff.
Thank you, Chris. Now we will start the Q&A session. Please drop the chat in the chat box now, whatever question that you have, or you may raise your hand. I will unmute you. Any question for Chee Hao and Chris? Well, both of your presentation very good. They listen carefully and understand everything. Okay, any question?
I think everyone is on the holiday moods already.
Raya time, right? Already off. All right, if there's no any question, anything you can have interested to trade a Singapore market, feel free to contact your remiser or dealer or drop us an email. Okay, so thank you, Chee Hao and Chris, and to all audience, you guys are great. Before we end the today's session, we would like to wish every of our Muslim friends Selamat Hari Raya Aidilfitri, and for everyone else a happy long holiday. See you all at future events. Thank you, everyone.
Thank you.
Thank you,
Thanks.
Mahaya. Thanks.